is a guy that I used to work with at Zoetis that has joined this Cattlenomics. It is a commodity trader group out of Loveland, and he's going to give us a market report. Is that fair, Ben?
Yep.
Hey, can you guys
Yes,
hear?
you bet. So, I apologize, I can't be there in person with you all today. Busy sorting the fat cattle for the National Western Livestock Judging Contest a little later this week. So, got out of the office this morning, got my boots a little dirty. But we'll try to make it kind of quick because I know sounds like this is the tail end of you all's meeting here today. But hopefully the cattle markets have everybody in a good mood. Definitely some wild history in the making each week, it seems like. So kind of just an agenda that we'll roll through here. We're just going to talk briefly about cattle inventory and kind of what placements have looked like as of recent, the Mexican feeder import situation, and then we'll touch a little bit on slaughter and production, a little bit on imports and exports, net beef availability here in the U.S. One thing that's really been on our minds recently is the hedge fund money flow and commitment of traders data. And then we'll kind of wrap up with some LRP and LGM stuff. So just jumping right into it, cattle on feed, we are right there, pretty similar with year-ago levels. If you would have asked me a year ago, if by this time in January of 2025, if we would still have close to 100% of the year ago levels on feed, I probably would have laughed. It's been a really surprising development as we move through the fall and into this winter that we continue to keep the same number of cattle on feed. There's times where we maybe want to poke holes in the USDA, but like it or not, that's probably the best estimate that we get. It is an estimate, right? So, but part of how we've achieved keeping cattle on feed numbers up where they're at, around 12 million head, is the fact that we're adding so many more days on feed. It's pretty wild. When I think back to when I was buying fat cattle 10, 15 years ago now, there'd be a lot of times we'd feed 8 weights, 110 to 130 days. We're pushing a lot of these 8-weight cattle now, 180. There's some guys even pushing them all the way out to 190, 200 days. The economics of it still makes sense in terms of cheap corn costs. So by adding so many days on feed, we're continuing to see this cattle on feed number hang in there near year-ago levels. Most recent cattle placements from our November cattle on feed last month had placements down just a little bit. My bias is that we probably really start to see this drop. We tend to cross the largest number of Mexican feeders there in November and December. So we'll definitely see that impact here as we move across the next couple cattle on feed reports as well. So this is our estimate in terms of beef cow inventory. We'll get this number here, I guess it'll be a week from Friday. We'll get that number from the USDA. So our bias is that we probably have somewhere around 28 million beef cows. That number's pretty small, and I think that we really probably start to feel the impact of that number as we move through 2025 and into 2026. So this is kind of interesting. So if we take that number that the USDA gives us in terms of the total number of beef cows, and then we start to subtract from that the number of feeder cattle that are placed throughout the year. From our data, we have placed a record number of cattle through November. This is interesting from the standpoint that it probably leaves us a much smaller supply to place from here in early 2026. It essentially tells us that there's just not that many cattle outside of the feed yards at the moment. Feeder cattle prices would probably help to confirm that, especially as we see some of these guys in the southern states try to buy cattle to go to wheat pasture. Mexican feeder imports. So on average, we import, I think it's a little over 25,000 head of Mexicans per week. Obviously, that ebbs and flows some as we go through the year. We tend to peak that supply in the fall, starting October, basically through December. We see a lot of those Mexican cattle flow north across the border and go to wheat pasture and get placed in Oklahoma and Texas feed yards, and some even a little further north. With the screwworm situation that essentially shut off border crossings there in November, we've since seen those imports drop to zero. There's some talk that we may see the border open up next Monday. That has yet to be confirmed by the USDA. We do have some customers that are within our office that have some dates cross cattle in February and March. So we think that those cattle will start to flow across the border at some point here during the first quarter of 2025. With that being said, the record number that we have ever crossed in a week is around 56,000. From just anecdotal reports that we hear, there's a lot of cattle stacked up at the border waiting to cross. Part of that is due to our strong dollar situation versus Mexican peso. So we anticipate that given, if we get some of the bureaucratics out of the way, we'll probably see pretty large crossings of Mexican feeders. With that being said, there's also the risk that some of those cattle are getting too big and probably will just end up staying in Mexico and going on feed in Mexico. Most of their feed yard capacity down there is pretty full at the moment from what we hear. But we're likely to see those Mexican feeder imports resume. But as of right now, that's been a pretty positive bounce to the feeder cattle market. Cumulative steer and heifer slaughter. So we look at this in terms of the slaughter basically through the end of 2024. This has been pretty interesting too. So if you look at this, we've essentially slaughtered just a hair more steers in 2024 than we did the prior year. Again, that surprises me just a little bit. And yet we're seeing a few less heifers slaughtered here in 2024. So we're probably starting to see the beginning of some herd rebuilding. My bias is that's probably just starting, and it's going to be pretty slow. Given the price of calves as well as interest rates and some of the other headwinds that we're facing to herd rebuilding, it's probably not going to be a similar rebuilding as we've seen in years past. Do you have any questions so far? Am I coming through okay?
You're coming through good.
I have been muted to the room.
All right. Carcass weights. So this is the latest data as of last week. I have not, we'll get some new data here Thursday that'll show weights a little larger. Given our cheap cost of gain and cheap ration cost here in the feed yard, we're making these cattle pretty large, right? We've got a pretty wide spread between, somewhere around $1.05, $1.10 cost of gain and $1.98 to, I guess, $2.05 sale price this last week. So that's a pretty large spread between cost of gain and sale price. So the incentive still continues to make these cattle really large. The formula weights, for example, so the weight estimates that are pulled off of the cattle turned in off of NPR each week, they come out on Monday, essentially have steers up 8 pounds this last week, which is 45 pounds larger than a year ago, or almost just shy of 5% larger than a year ago. So we're essentially in record weight territory. My bias is that we probably continue to see record weights as we move forward here in the first quarter of 2025, essentially barring any massive weather disruptions or any changes to the market that incentivize guys to take pounds off. We're probably likely to see a lot of the reduced head count made up by more total pounds. All right, beef and dairy cow slaughter. I guess this is one that did not surprise me in 2024. We slaughtered a lot of beef cows. I'm sure as you all are well aware, in 2021, 2022, and even into 2023, we saw a lot of those beef cows head to town. Feed was tight, pastures were dry. So we've removed a lot of the beef cow production factory, and now we're going to probably start to see the consequences of that. So if you combine the two, both beef and dairy cows were down. Slaughter in 2024 was down just over 1 million head. I think it was like just shy of 1.1 million head when we get the final numbers tallied in here. One thing, there's been a lot of talk about the dairy cows and these beef on dairy cattle making up the cattle on feed and starting to take over a higher percentage of our cattle on feed. That's probably not likely. We've been fairly consistent in terms of the number of dairy cows in the market for about the last 5-10 years. With that being said, they've sent a lot of dairy cows to town in the last couple of years as well. The high cull cow prices have certainly incentivized that. We've seen some more of these cows move to town due to the bird flu situation as well. And there have been a lot of these dairy producers that have been breeding their dairy cows to beef bulls, and we're certainly enjoying the price benefits of selling some beef on dairy calves. But with that, we're in pretty tight numbers now in terms of dairy cow production. So we're starting to see a lot of these guys rotating back to making dairy heifer replacements. That trend's probably likely to continue in 2025 as well. They've shortened up their factory numbers enough that it's time for them to make some more dairy cows. So we're likely to continue seeing both beef and dairy cows staying on the small side. There's probably some risk that we could close a cow plant sometime in 2025. When we look at cow capacity, cow slaughter capacity, and capacity utilization in a lot of those cow plants, there's some regions of the country where we're only around 75% capacity utilization. So not very profitable to run a cow plant when you're only at 75% capacity for extended periods of time. All right, just a quick note on the trade balance. So this is exports minus imports. We like to look at this just in terms of a barometer, in terms of how much beef is available here in the U.S. So given the strong dollar situation here in the U.S., we have been importing a tremendous amount of beef. Most of that beef comes in the form of lean trim and kind of manufacturing beef. A lot of it coming from South America as well as some from Australia. I think we got news this morning that Brazil has already hit around 85% of their quota, year-to-date quota, just in the first 2 weeks of 2025. So we're going to see a massive amount of beef imported. The one thing is that will probably keep the demand for 50% trim or fat trim pretty high, because we've got to have some fattier product to blend in with those imports. This is net beef availability. So given how high our production has been in terms of carcass weights as well as our balance, trimming balance, we're seeing net beef availability that's probably quite a bit higher than I would have guessed. That's probably likely to continue just based on our expected import numbers as well as our continued carcass weights and production numbers. So fed beef demand. So we get to this number by basically calculating how much we produced and the price which it was sold at. So as you can see, we're starting off 2025 essentially at record levels. 2024 was a great year for beef demand. That's one of the things that has driven us here to have fed cattle prices around 203, 205 this last week. Beef demand is great. We're seeing consumers continue to step up and spend more of their income on beef. It had been a little bit surprising to me. I thought, if anything, given inflation and given some of the increased costs that a lot of consumers are facing, that we would see them rotate into more poultry or pork. That really isn't the case, though, and a lot of the data coming out now is starting to show that people just don't really like pork. I go to Costco and I see a whole pork line that you can buy for things like $2.99 a pound, $3.99 a pound, and that looks pretty cheap relative to choice ribeyes at $14, $15 a pound, and prime somewhere $21 to $24 a pound. So people are continuing to buy beef. That's really, really good news. If we start to see any sort of demand pullback, there's some risk that then we could see prices pull back from there. But as of now, beef is king. Managed money, commitment of trader data. So we got some new commitment of trader data as of this afternoon. That's not in this presentation yet. I couldn't get it through compliance quite that quick. But it's been pretty interesting. So managed money, so essentially hedge funds are at close to record length in live cattle. So we're seeing a lot of investment from hedge funds in ag right now, in ag commodities. They're towards the upper end of all-time length in live cattle. So this is as of today. They're just 33,000 contracts shy of the all-time record in 2017. And this is the largest open interest that we've seen in live cattle since basically spring of 2019. They are record long in the feeder cattle markets, just barely. And if I remember right, we're pretty close to record in terms of open interest in feeder cattle as well. This is a little bit of a precarious situation because we've got both producers that are more hedged than they were a year ago, as well as managed money or hedge funds that have a lot more length than a year ago. If we were to see any sort of large shock to the market, there's some risk that we could see some of the hedge fund money pull out of the market. It can be a little bit volatile, but because of that extra investment into ag commodities, we're probably give us an opportunity to both manage risk up here at these prices as well as drive these contracts to new highs. So kind of a double-edged sword. It's a spot of risk that we've got to watch out for just a little bit. If we start to see those funds hit the gate, it can get pretty volatile. All right, so LRP, I'm sure there's probably some of you there that are fairly knowledgeable about LRP. Initially, to be honest, our office had been a little bit critical of the program just because we felt like there were some loopholes that allowed maybe people to take advantage of it. Last fall, fall of 2023, we saw a cattle on feed report come out that was fairly negative. And because people are able to enroll in LRP in the evenings, we saw a record number of LRP put on right after a really bearish cattle on feed report. So that can make it pretty tough to manage risk around there. We're pretty firm believers that LRP is a really good product if used at the right time. So we like to essentially look at LRP versus what put would cost in the futures market. Obviously, LRP is government subsidized, so it tends to come in just a little bit cheaper than what it would look like in the futures market. But in my mind, the ultimate way to kind of harness and use LRP is to still go ahead and utilize some options or some futures on the other side of it to help offset some of that cost. If we've seen a break in the market, either selling an out-of-the-money put or potentially selling an out-of-the-money call, which would limit your upside, but certainly cheapens up the cost of that LRP. We do a number of reports, so we're both commodity brokerage as well as focused on research. We've got a team, several individuals that focus mostly on research and put together some data. So we like to put together some reports around LRP that shows essentially when most people put on the LRP by date. So right there, December 18th, that was right ahead of a cattle on feed report. We saw a lot of people take some risk off right before that event. Also, when we start to look at the LRP by price, it kind of gives us an idea of where most of the market is probably hedged at, and where guys are kind of comfortable, taking risk off at. As you can see here, we've seen a large number of those LRP policies put on there in that 240 to 248 level, and then again 260 to kind of 262. Obviously, most of those LRP contracts, if they expire anytime soon, are going to go not paid out. but which is a good thing ultimately. And that's probably why, if you're utilizing LRP, I think you probably need to use some options to help cheapen that cost. LGM, this is a program that we're seeing a lot more interest in from our feed yard side. Essentially, LGM falls under the same category as LRP, but it allows guys to essentially harness the crush, which would be live cattle, feeder cattle, and corn via options. So it's kind of a subsidized crush model where a guy can go lock in a set margin depending on their out date. So kind of a unique program too. We feel like there's probably not enough people, if you're retaining ownership and feeding your cattle, there's probably not enough people that are harnessing LGM. It's a little more complicated to understand, just the different legs of the crush that come together, but it's a good tool to have in the toolbox as well. So takeaways, we'll kind of wrap this up and then take any questions you all have. So one thing we're obviously seeing now is tighter feeder cattle supplies ahead. Essentially, we had no feeder cattle sales over the holidays, right? We had 2 weeks there with very limited feeder cattle movement. So because of that, we are seeing a pretty high demand from feed yards for feeder cattle at the moment. I think the latest daily index came in at 272. So that is pretty stout. My bias is that we probably continue to see that here for the next 60 to 90 days. We have some risk that the market could pull back just a little bit there, given the most recent corn report that rallied the front end of the corn curve a good 15, 20 cents. So that makes cost of gains a little higher at the feed yard level, but we certainly haven't seen them back off of feeders at all. We're likely to face some headwinds in terms of beef exports and imports. I didn't put a chart up around the U.S. dollar, but the U.S. dollar is really, really strong compared to a lot of our foreign trade partners. My bias is that we probably start to see that dollar soften up as we get into 2025. It's been at kind of record levels here. And some of the things in terms of reduced government spending should help keep that dollar strong. But that's not going to be real helpful in terms of our beef exports. I think if I remember right, I think we wrapped up the year somewhere around 8-10% on beef exports. I'm a little surprised it wasn't more than that, given just how strong our currency has been. Kind of like we talked about, beef demand in 2024 has been really strong. People love beef. And as far as we can tell, we're still continuing that trend here in 2025. We're pretty close to record levels of the cutout. I don't know if I looked at that here this afternoon. Yeah, 333 on the choice here this afternoon. So we're continuing to see really strong beef demand. Cow slaughter is going to continue to be small. Some of that will be offset by big imports of lean trim from especially from South America. Managed money is going to continue to add length. So I don't really see any reason why managed money is going to pull out of ag commodities anytime soon. That's probably a pretty good bet considering where equities have run here in the last year to go ahead and spread some of that risk and have some length in commodities if we continue to see inflation. We're likely to see some heifer retention starting to happen. As everyone is starting to recover from several of the big kind of black swan events, I think that we'll see people become more comfortable with keeping some heifers back. We're probably likely to keep some of those cows back too. Guys go ahead and take a chance on some rebreeds. So we'll probably see less heifers in the feed yard in 2025, as well as probably just less cull cows coming through the sale barn. Cheap feed is going to make big carcass weights. We're reaching the point now where we're starting to see just the biological limits of how big we can make these cattle. We're feeding some more advanced beta agonists now as well. So that is definitely having an effect on carcass weights. We're just really starting to see that on the heifer carcass weights in the last couple of reports. We think that the LRP and LGM programs will continue, hopefully with some more tweaks. We'd like to see the LGM program tweaked basically to more accurately reflect out weights. But both those programs are really good tools to have in the toolbox. Probably need to trade, utilize them carefully to make sure that we're not putting them on at levels that are too cheap and essentially giving up some of that extra profit. Being at record prices, it's important we do some risk management at these levels, but we got to be tactful in terms of how we put those on as well. So let's open it up for any questions and answers.
Can you hear us?
Hopefully we'll have some answers. Yep.
Okay. Questions, anybody?
What's the change with the yield grade deal? Are they changing, I heard something, they were changing yield grade, how they're computing that.
Did you hear that?
Yep. So I'm hopeful that this actually goes through. Dr. Dale Werner, I know, has been doing a lot of research around this yield grade. And essentially, if you think about this, think about how much we've changed cattle since the yield grade program was put into effect. I mean, this is a totally different animal with a lot more muscle. We're looking at some of these cattle now, we're using 64, 65. And we just don't feel that maybe the yield grades necessarily reflect cuttability as well as they should. There's been a lot of research as well in terms of the yield grade on these beef and dairy cattle. Typically, dairy cattle tend to put on more internal fat, more kph, and tend to have less fat around the edge of the ribeye. So it's probably important that we maybe make some tweaks to yield grades to make sure that we're accurately both paying and discounting cattle that are an issue. So could be good. Just to touch on that, one question I do get a lot is, if these beef on dairy are going to push beef cattle out. We have always had a number of dairy cattle in the market. Like I said, the dairy cow number's been relatively steady. And so we previously had just a lot of Holstein steers on feed that flowed to some plants up in Green Bay or Tucson, Arizona, as well as some of our major beef plants. Essentially now, by adding beef into the mix, we just added more carcass weight. We really haven't changed the head count much.
So tell us what the fall is going to bring for 5-6 weight calves and the standard cull cow.
And we're recording.
Okay. Let me get my crystal ball out here. And that's a pretty tough one, I think that I don't see profitability changing much for the cow-calf sector. So the cow-calf sector has been pretty slow to expand, and rightfully so. They face a lot of headwinds and a lot of black swan events that have made it pretty tough to want to stay in the cow market. As well as, inflation and interest rates, everything else. So given that fact that we really just haven't done a ton of expansion yet, I don't see how, we really can deviate much from close to record prices as we move into the fall. I mean, we'll definitely have some headwinds. There'll be some risk that we could potentially close a cow plant or even a beef plant. These packers, both on the cow side and the fed beef side, are not having a real great time right now. I talk to those guys fairly frequently. I'm a recovering fat cattle buyer myself, and it's been pretty volatile. They're getting back close to a break even here this week with choice beef at 333, but they've gone through most of 2024 and starting out 2025 and ready. So they're not having a real great time, and there is risk that, especially as we see some new plants come online at North Platte and in Missouri and a couple of the other plants, there's some risk that we see some older plants go offline too. So that's potential headwinds to the live cattle. In terms of feeder cattle, we're pretty large in terms of bump capacity. We could see some of those guys really start to get stretched in terms of their margins on the feeding side too. So as of right now, I think that both cull cows and feeder cattle probably be pretty strong.
Any other questions?
Ben, you see anything major on the horizon with the tariff talk with the incoming administration with trade with Mexico and Canada?
Yeah, that's definitely been a hot issue that we've talked with a lot of customers about just about every week. I think until we see Trump get into office and we see it actually happen, right now I think we've just got to consider it a trading point, right? He's threatening tariffs on Canada, and next thing you know, he's got Trudeau flying to Florida to meet with him. So I think that more than likely it's a negotiation tactic, and it helps get some of those players to the table to maybe negotiate some more favorable terms for us here in the U.S. But I'm a little hesitant to think that maybe all the tariffs he's proposed are going to happen right away. I will say, so we handle a lot of Canadian customers. The founder of our company at Cattlenomics, Travis Hickey, he's a native Canadian himself, and so we trade quite a bit with and do quite a bit of work with some Canadian customers. And we're pretty encouraged by the fact that Trudeau resigned this last week. It's going to be a little bit till he comes out of office, but if they get who I think they'll get in there into office up north, that should be pretty positive to Canada. So hopefully he's willing to come to the table and negotiate with Trump as well.
Anybody else? That looks like that's it, Ben.
All right. Well, I wish I could have been there with you all in person. Certainly fun catching up about the markets. My contact info is right there on the screen. Feel free to reach out, contact us if you ever need any help with LRP or risk management. We do some data subscriptions that we offer as well. So kind of full service. We try to kind of tailor to everybody's needs. So been a pleasure visiting with you all, and feel free to reach out.
Thanks, Ben.
Thanks, guys.